Welcome to another SIA Charts Focus video. Today we are going to look at our new 5 US ETF sector model. It is very similar to the Canadian 5 ETF sector model, which we have been running for almost 10 years. The model can be found in the Models tab under the SIA Models subtab as you see here. As I scroll down, you could see the fund selection process. What we are doing here is we are always looking at the 5 top ranked sectors in the US ETF sector tab. If I go to the Reports tab, here under US ETF sectors, we will identify the top 5 US sectors. From here, we will take the top fund in each of these top 5 sectors. For example, mid-cap value is one of the top 5 sectors. We would look at the report here, mid-cap value, and we would identify the top ETF in this report. Every quarter at the beginning of the quarter, we will look at the top 5 sectors. If they fall below the top 5, if I go back to the ETF sectors report, then that holding will get replaced with another sector that is now in the top 5. There is a second sell trigger where if the sector is still in the top 5, but the fund itself falls below the green favored zone of that report, it will also get replaced with something higher up in the favored zone. Going back to the model, we have also overlaid the SIA equity action call on this model. For example, if the equity action call moves to the unfavored zone, the model sells all funds and moves into a cash proxy of the same currency. If the equity action call moves to the neutral zone, newly sold positions will remain in cash. And lastly, if the equity action call is in the favored zone, newly sold positions are replaced immediately according to the buy rules as mentioned above. In looking at the performance of this model, you could see this model has performed at 11.56% since inception of December 31st, 2012. We have outperformed the S&P 500 by approximately 0.7 percentages, and we have outperformed the TSX composite by approximately 7%. However, looking at some of the risk metrics of this model, you could see the alpha for our model is at 1.16, the beta at 0.7, implying less volatility, and you can see some favorable upside capture, downside captures, and total capture ratios for our model. Hence, if you're looking to achieve better returns at much less volatility, you may want to consider incorporating this strategy with some of the other strategies that you are running. If you wish to follow this model, scroll back up, click on the follow button as you see here, and you will be added to the email list for any changes going forward. Case in point, this model is updated every quarter and rebalanced every quarter. Email notifications will come every quarter at the beginning of the quarter. And there you go. As always, remember to manage your risk in the markets and have a great rest of your day.